Hey everyone, this is the price action review for March 24th, 2021 for the S&P 500. And so what I want to talk about today is this is just a weekly chart before we talk about the daily chart, is that, the key to price action trading is that you're always trying to be on the right side of the trend. And you don't trade against the trend until you have evidence that the trend is weakening. And so what I mean by trends is that you can have, bull markets, bear markets, and trading ranges. And those are pretty much the three primary ways of looking at the market. And unless you have a major event like COVID, usually the market doesn't abruptly change. What I mean by that is, the market just doesn't go from a bull market to immediately a large bear market. Usually what happens is things transition. They transition from an uptrend to a trading range, and then to maybe a longer term trading range, and then a dip into a bear market. And so this is an important thing to understand. And so let's go back. Here's January, beginning of January, and we see that the S&P, the SPY ETF, which we're looking at, it already was at 381. Well, look where we are here in March, end of March, 398. So we've had 3 months of very, very subdued rallies. And you could more or less make the case that we're in a very, very slow uptrend, if not a trading range. And what happens is price action trading is that you are in the uptrend, and then you start to go the trend begins to slow, and then you go sideways and sideways and sideways and sideways until at the very least you're in a trading range. And then sometimes you begin to, or sometimes you pop out and you have a huge break, which may begins the beginning of more of a bear market kind of action. But we haven't seen that yet. So, but there's a lot of warning signs that, the rallies have been a lot easier to sell. Price comes up, a little bit, there's more selling, but there's not a lot of downturn either. So I think as time goes on, the bears are looking, they're looking that new highs can be sold more easily. There's not a lot of follow through. So let's go look at the 5-minute from today. So here's today, and like I always talk about in the first half hour, you have a lot of choppy action. So you have, market opens up, two bear bars, rally, large bear bar, no follow through, inside bar here, and then finally a medium good sized rally back up to 392. And then, so I think it was a Fed day, so there was probably some anxiety. And then the market stalls, and then we have just a very choppy downtrend. And when I talk about choppy, I always talk about how, the tails and the bars, there's tails. So every time the market comes down, these tails show up at these bars, and they're overlapping a lot. So there's not a lot of selling pressure. So the bulls are trying to at least hold the market up. And finally they break out of this little downtrend. There's two bull bars, but then we just go sideways until we finally see this massive bear bar. And what does this bear bar do? Well, it takes out, it's a good opportunity for a short, because think about it. We've had this longer turn top here. All these bars have just gone sideways, and this bar finally has nothing but bears all the way down to the bottom. Okay, and it closes below all like 7 or 8 bars here, and it's just nothing but sellers, the whole thing. So the strength is changing, and then we see some good follow through, and then the day just gets choppy, just choppy for a while until we finally have one more attempt to rally here, sideways, sell off, sideways, into chop. So it looks to me like things are just sort of probably in a trading range, but probably the odds are rising that we're going to have a larger break and go into, really flush out some more bulls. So we will see what happens tomorrow. Thanks for watching.